I think that that whole space is kind of fraught with landmines going forward. I'd be very cautious around putting serious capital in that space. Um, Bitcoin I put in a different category because it's not a security. It's a it's recognized as a digital commodity. I do think you could have Bitcoin consolidate or correct for a period of time, rather than keep going up at the same pace it has been, year to date. I think we're already kind of maybe seeing early signs of that, where we're due for a pause, due for a correction.
Hey guys, welcome back to Let's Talk Crypto. Last week, Bitcoin made waves by surpassing the $30,000 mark for the first time since June of 2022. Although it has dropped slightly to the $27,000 range at present, it was enough to dethrone other banking-related stories from the news. Even though the spotlight has moved away from it, there are still significant issues lingering in the background that could rear their ugly heads at any given time. In a recent interview with Keith McCullough of Hedgeye, macro investor Lyn Alden gave her insights on the current banking system and suggested ways in which the average investor can safeguard themselves. According to Lyn, the Federal Reserve is running at a loss, but this is not a major problem for them since they have the ability to print their way out of it whenever necessary. However, the impact of their actions will be felt in other areas such as banking, commercial real estate and the automotive industry, just to name a few. Alden is of the opinion that Bitcoin could serve as an attractive alternative to safeguard investments from what's happening in regards to the Federal Reserve and banking industry. Lyn suggested that Bitcoin and other cryptos have to be viewed separately, as the laws and regulations related to other cryptocurrencies remain uncertain. Let's listen to Lyn Alden as she shares her outlook on the crypto space and gives her take on the best time to buy Bitcoin. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
Well, I think partially you define your time frames first of all. And so basically some people, what they do is they put Bitcoin in a different segment where they say this is something I'm not going to touch for a certain period of time. Kind of like how if you have physical gold in your house versus say a paper gold in your portfolio,
Yep.
you might treat them differently. You might say that the physical gold, I'm not going to worry about the price. I'm not going to worry about timing anything. Whereas the paper gold, I might try to do that.
Yep.
I think it's the same for Bitcoin. I think there's, if you define yourself as a Bitcoin trader, you want to focus heavily on things like liquidity. I've done a lot of work on trying to figure out what are the main factors that are the strongest correlation with Bitcoin price. So, historically, one of the ones is the halving, but that's actually not really good for a specific timing purpose. Generally, liquidity and economic indicators are better. So, if you put it simply, if you buy Bitcoin when the PMI is rising, you're going to have a better time than if you buy Bitcoin when the PMI is falling. And if you want to get more precise than that, if you look at various liquidity indicators, they generally front run PMI a little bit.
Yep.
And Bitcoin also tends to front run PMI a little bit. So actually the closest correlate that I've generally found for Bitcoin is various measures of liquidity, both domestic liquidity and then global liquidity, including, say, dollar-denominated global M2 in rate of change terms. Those are the types of things that correlate heavily with Bitcoin. And so in any sort of like near-term environment, if you're trying to judge what it's going to do in a multi-week or multi-month period, you have to generally have a decent view on what liquidity is going to do. Whereas long-term, you can look at things like, what percentage of the supply is liquid versus like tightly held. What are the developments happening on that whole ecosystem? So what is making Bitcoin better to use, better to interact with? What are the other technologies kind of building on that whole stack? And so the way that I view Bitcoin is I have this kind of long-term holding, this very long-term structural view that I occasionally check to make sure that thesis is still in place. But then I use the shorter term stuff, the cyclical stuff, to one, manage position sizes, and then two, set expectations in a near term. And so, for example, I would use during this past cycle, I would use GBTC as a way to, get in or get out, kind of change my position in that sense. Whereas like say cold storage Bitcoin, I treat more like physical gold, where it's something that you have a structural view on that you almost hold as a separate category. When I was doing research to figure out what is most correlated with Bitcoin, I kind of touched on multiple areas. Like one is that economic rate of change, like, PMI, or, a set of indicators that kind of resemble something like PMI. Is the economy accelerating or decelerating? That is a pretty strong, and the reason those both work is that both liquidity and the quads or the economic cycle are rather correlated in themselves, because liquidity is kind of a big component that helps drive economic cycles one way or another, and so you kind of get a slight difference on the exact timing. But yeah, essentially, I do think that this recent liquidity pump was a big factor. Now, obviously, Bitcoin has been rising before you got this big March liquidity injection,
Mhm.
which is obviously it's different than QE, but it's still a pro liquidity effect while it was happening. And so, I think part of it was that, Bitcoin was so beaten down by the whole, crypto fraud, FTX, all that stuff that happened last year. So if anything, it was earlier this year, you had kind of had a partial recovery just because you had super oversold levels. You had a lot of kind of long-term people kind of coming into the market, buying it, pulling it back up. A lot of it also was the dollar index. So, if you look at where the dollar peaked back at that
Yep.
late last year, that was roughly when you started to have the Treasury was providing liquidity that the Fed was still removing. And so if anything, that kind of is partially explains the Bitcoin move because you had, liquidity was getting worse and worse and worse, and you had all these leverage things blow up. But then once you had that kind of liquidity start to stagnate for a period of time, it allowed the fundamental kind of longer term aspects of Bitcoin to start taking over again. But yeah, if you have liquidity roll over again here, I do think you could have Bitcoin consolidate or correct for a period of time, rather than keep going up at the same pace it has been, year to date. I think we're already kind of maybe seeing early signs of that where we're due for a pause, due for a correction. And I think that'll be heavily tied to partially the economic cycle, partially liquidity, and then especially because both of those are inherently intertwined anyway. When you have your cash, you have to find what the purpose is. Obviously, if you're looking for the longer term safer stuff, T-bills, money markets that have reverse repo exposure to the Fed. I mean, you're getting better counterparties than any individual bank. Whereas banks are more for that liquidity that when you need it right there. I would be concerned about any sort of teaser rate because you have to ask long term, is this sustainable? I mean, a lot of these banks are holding securities and loans that are yielding, less than or roughly in line with that 4% number. And so it does kind of threaten their long-term profitability in order to have very, very high, those super high rates. And I think that, we don't see much movement on, for example, JP Morgan, because they don't have to raise rates. Everybody wants an account at JP Morgan, but you do see kind of these long tail of other banks being the ones that are more aggressive in trying to retain or collect deposits by jacking up their rates, and that does threaten their profitability. I'd be very cautious on keeping anything above the FDIC limit in any bank, especially banks outside of the top four, because you never know, you never know where these things can strike, especially because if a bank's, even if it's relatively solvent on the surface, you don't know necessarily the quality of its loan book unless you've done rigorous analysis on that particular bank. And so any one of these is kind of subject to risks. And I think it's going to be just an ongoing challenge because now that product's out, for example, that's another liquidity suck. So money markets are already kind of, pulling capital towards them. The large banks are already pulling, deposits towards them. Teaser rates like this can pull deposits towards them, and that puts a lot of pressure on the existing
Yep.
banks that are have very low yields on their asset book and are slowly having to raise rates to keep up with this.
How much of a crypto bubble mania head trip do you think we still have left?
So I separate kind of Bitcoin from the rest of the crypto space.
Yep.
I think the broad crypto space, I think the noise to signal ratio is unfortunately very high. I still think there's a lot of froth that has to bleed out. I think we're obviously seeing more and more regulatory hits against that space. Basically, is they define what is a security, which assets have violated security laws, which companies have violated security laws by selling those assets to the public. And so I think that whole space is kind of fraught with landmines going forward. I'd be very cautious around putting serious capital in that space. Bitcoin I put in a different category because it's not a security. It's recognized as a digital commodity because it doesn't pass the Howey test. I also think the fundamentals that the actual decentralization is more robust, and so I do think that a lot of the froth has already been worked out of the Bitcoin space. A lot of the tourists have gone during this whole kind of catastrophic bear market. There's a lot of interesting development that's happening, both in terms of you can get exposure with the underlying asset, but then also for accredited investors, there's actually interesting, say, VC opportunities out there that I think quite good. But once you go to that the broader space, I still think there's a lot that's probably going to bleed out over time in terms of existing froth across the market.
Lynn cautioned against keeping large amounts of money in the bank, but also against investing too much of it in cryptocurrencies other than Bitcoin, as the whole space is still froth with landmines. She believes that as liquidity rolls over, Bitcoin is due for a pause and correction, which we are already seeing, as Bitcoin dropped 7.45% over the last 5 days. The question is, how much lower can the price drop? What do you think of Lynn's assessment of the crypto space? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.